Our next session is about challenges and opportunities of credit management in times of a disruption of global economy. I welcome Professor Dr. Matthias Schumann, professor at the University of Göttingen. And over to you.
Thank you very much, Robert, for the introduction. Ladies and gentlemen, a very warm welcome from my side. I want to give this presentation in 6 steps. I'd like to start out with the very brief description of the challenges. What are the economic consequences and figures that result out of these challenges? And then I like to walk through several measurements relevant for credit management, how we are able to solve and to react on these challenges. Let me start out with the global challenges for our economy. Last year we thought, well, we have a pandemic and then after that everything's over. However, pandemic is still around. We have to see what happens in the fall and winter season. And one result is within our companies we have a higher sick leave, and in China, as you know, we very often have, through the zero politics over there, lockdowns. As a result, as one result, but not the only one, we have shortage in material, and we have broken supply chains where we have to handle these things. And of course, we have this Ukraine war with the sanctions from the Americans, the European Union, nearly worldwide against Russia. But we also have to have in mind that there is a slight shift or change in the political framework of China. And due to the strong rising prices, interest rates go up to slow down inflation. And at least from the discussions, the biggest problem right now is the energy shortage, especially in Europe, due to the Russian supply restrictions with skyrocketing energy prices for our industry and for the consumption. What are the economic consequences out of that? Let me first give a little glance from a German perspective. Here we see a high increase in energy costs. That are the ratios from April this year, and today they are even higher. We see that the gasoline prices raised up to 50% compared to last year. Gas prices for the consumers doubled. Same with power. If we look into the import price for natural gas per month, and if we compare them, for example, to 2020, they are 6 times higher than 2020. And as a result, of course, energy-intensive industries suffer from these costs that they have over there. If we then look into the material shortage, well, also there we see increasing prices. And if we have companies that have fixed prices and need these materials, of course, financial risks increase, same with time commitments they made, and probably since they are not able to deliver, they have losses of revenues. Well, as a result, we have an inflation, interest rates increase. That means for a customer, probably in B2B business, they have expensive credit lines. Therefore, they like to use supplier credits, and supplier credits get more and more important. But also the consumer price index is much higher compared to last year. If you look at the figures from August 2021 to August 2022, you see a rise of approximately 9%. And if you look into the developments that take place in China, we see that the economy is slowing down. We have further lockdowns with far-reaching economic consequences. we see that the state is handling some industries different than they did before. And as a result, there we also have from customers late payment or non-payment. And that means we have to monitor these companies more and more compared to the past. That means early indicators must be considered by the credit management for these regions. And we have to ask what happens with the foreign direct investments in China and what happens to joint ventures that we see in China. To show that also with figures, this slide shows you the change of the industry production throughout the last year. And there you see that this increase is reduced to 3%. And we also had a decline at the beginning of the year. And therefore, also the trade with China is not in a very comfortable situation. And we have to consider other factors. Well, personal bottlenecks in many service industries throughout Europe. We have wage and salary increases that drive inflation. We have home office flexibilization, which creates global labor markets with adjusted prices. And due to the material shortage with price increase, due to climate requirements and interest rate increase, also the construction business will suffer in the future. If we try to look at the interdependencies, you see all these red arcs that show that it's getting worse. I like to pick only a couple of items here. Well, private households, costs are rising higher compared to wages and salaries. Therefore, consumption is going down. And on the industry side, on the company side, there we see that due to the unsecure future, investments are going down, but costs, energy costs, for example, but also material costs are going up, and sales are going down. We are not in a very comfortable situation, and that's something that we can see too if we look for Germany to the German Climate Business Index. There you see that we nearly close to the low level that we had during the pandemic lockdown at the beginning of 2020. And well, the future seems to be not so favorable. We have to see how everything's developing. Therefore, we have to look for credit management. What are the consequences? Consequences especially for the credit portfolio of the companies. What we see is that due to the globalization, especially local events have far-reaching global consequences. Shortage in energy in Europe has a very negative influence on many industries, also on those that only use parts from energy-intensive industries. And we have to consider the problems with our supply chains, and we have to have in mind that our suppliers are affected too, not only our customers. That means complexity of the interrelationships and such, also of the analysis, is increasing. What are the general factors for risk assessment of customers? Well, what are customers of particular risky industries? What are regions or countries with high export quotas? Countries like Russia, China, who is exporting there, who is making business with these regions. And, of course, also the question where and what do we purchase? What can we do? Well, We can use financial statement analysis for break-even or what-if analysis. Question might be, how much cost increase is possible without writing losses for a customer? What is the level of liquidity reserves, or how long can turnover be postponed for a company? We have to ask the relevant questions also for our suppliers so that we don't run out of parts and we don't lose revenues. Well, we have to select the potential customers that are in higher risks. We have, of course, to focus on small and medium-sized enterprises. We have to observe costs and sales. Cash flow is important, and probably we have to gradually adjust credit lines for these companies. That means one basic factor in the analysis might be to analyze financial statements. Also, they reflect pictures from the past. Most important for us, liquidity and profit and ratio analysis. An example from Germany, a German retail company. I will start with the profit and loss statement from 2019 and 2020, and I just want to put your attention on some figures there to show you results for retail that come out of the pandemic situation. Well, what you can see here is that for this company, revenues were reduced by close to 25%, and as a result, we have a very high loss of more than 36 million euros compared to a small profit in 2019. If you look into the balance sheet, ladies and gentlemen, of course we see an increase in inventory. They didn't make sales due to e-commerce and due to the lockdowns. And the result of the losses was that we had an equity only of 6.3 million compared to 42 million in 2019. And of course, the short-term liabilities were raised up to short to 70 million. Very difficult situation. And if you look into the ratios, you see that too. If you look to the equity ratio, it was reduced to 6.5%, and the quick ratio and the liquidity analysis and the current ratio were fine in 2019, but they were going down in a way that it was critical in 2020, and to be honest, it wasn't better in 2021, and this company filed bankruptcy at the beginning of 2022. But that is a long run where we have to go and to analyze and to see what will happen. But we also have to monitor the short run, especially for our frequent customers. What are we able to do there? We have to observe our internal payment experiences. We can do that if we compare the ratios for these payment experiences month by month, especially with the focus of the deviation from payment terms. Well, in this area, Schumann right now is trying to improve the already existing automated analysis. We try to improve our early warning systems for the ones who use our internal payment experiences there. And of course, one of these alarm signals might be when a customer moves from cash discount to a net payer. We don't have any dunning there, but the company, probably due to liquidity shortage is moving towards net payment. Besides, also payment pools might be helpful. If we are an A supplier, our customer probably still pays us very well, but for a B or C class supplier, the customer pays much worse, and that might be an alarm signal for us to see that the customer probably gets into trouble. How are we able to use tools for risk limitation or also for keep our liquidity in these difficult times? Well, like we have had the presentation before, one tool might be still trade credit insurance. Of course, we have the experience for the financial crisis, but these days, trade credit insurers go much more differentiated with limit reductions and limit cancellations, where they have very high risks on our customer side. And of course, we will also see on average price increases. But we have to have in mind, first of all, we have an independent risk assessment, and we still have risk coverage for approved limits. If these limits are not high enough, probably top-up policies might be a solution to cover risk reductions. And I think what we will see too in the future, especially for expert-driven economies, is that will have an increase in governmental surety. And we also are able to discuss factoring during this crisis. Well, payment terms, as I mentioned at the beginning, for our customers will go up because they might have less liquidity. And worse rating with payment terms going up means higher risks. Well, what might help? Factoring might help if we get early access to liquidity, if we get better early risk detection with further risk assessment, and possible risk coverage by the factoring company too. That means we can leverage liquidity reserves based on factoring. Let me come to sum that up and to come to my conclusion. What I like to focus on that it is important that we anticipate the consequences of the economic crisis that is becoming more and more relevant for credit management. To be prepared, comprehensive and correctly maintain master data as well as mechanisms for select the right customer or right customer groups as well as supplier groups based on industry segment or country is necessary. Permanent monitoring of company key figures and early identification and prediction of difficult payment situations and payment behavior is necessary for frequent customers. We not only have to do that on the customer side, we also have to identify difficult situations on our supplier side. And I want to close with a comment that during the pandemic, there were sales slumps, as I gave you one example. Now we are in a situation where we have massive cost increases for the companies and sales declines too. Both are relevant, and therefore we have to monitor all our businesses. Thank you for listening, and have a good and inspiring day.
Yeah, so thank you very much for all the insights. So there are some questions coming in, and I would have to filter that because we cannot cover all the questions, but after the conference we will respond to that. So there was a question coming in regarding the interesting topic to use payment experiences. How are you using payment experiences? Is that only for a default risk prediction, or is that also in the liquidity side for liquidity forecast?
What we do is we try to use that for both things. In the past, we basically used that for as a warning system for risk identification. That's easy to do. You see how the payment is changing, and based on these changes, you have a warning system. What we do now, we try to predict how a customer will pay his bills. And based on that, you have an excellent instrument for liquidity forecasts as well. And we try to support that by using artificial intelligence tools. It's quite complicated. Some companies always pay late, but they are not in a bad liquidity situation. Other companies run their payments on certain days throughout the week and so forth, and you have to filter that out. But I think that's a nice tool that will help companies also on the liquidity side.
Yeah, thank you. And another question, well, this is a crystal ball question, sustainability of uncertainty. So you covered a lot of influences at the moment, but what are you expecting in medium term and maybe in long term? Maybe just an outlook.
Well, what we will see, for example, in the construction and the building industry, in the European market and the German market, they are still have a lot to do. That, at least that's my expectation, will end in the fourth quarter next year. Construction industry is always the last one that is affected. Machinery industry is already in trouble due to electronic problems that they have. Components are missing and so on and so forth. They already have problems also since they have a high export quota to China. And well, depends what will happen with the energy prices. If we are able to stop the rising prices, then we might be in a better situation next year. If we aren't able to stop that, I think the situation will go on. And to a certain extent, we don't know what will happen to the Ukraine war and what Putin will do as the next steps.
So thank you very much for this answer. Not easy to answer, to look into the future. So thank you very much for your insight.
Very welcome, and have a good day.
Thank you.